Welcome back to 7-Minute Options on Monday, December 6th. A green day today. It looks like the market is not that afraid of Omicron, which is fantastic news. Last thing we need right now is another market panic. So yeah, pretty good day overall. A couple of things caught my eye this morning. One is this position here, EWZ. So this is the Brazil ETF, right? It basically tracks a whole bunch of different stocks within Brazil. And I've had this 30 put 31 call strangle on there for quite a while. If I look at the history of this one, I opened this one back in September for $1.06, and then my position got challenged. I rolled it for 76 cents, and then I rolled it again for 23 cents, and I rolled it again for 98 cents. So far I've collected $303 in credit. Today I can close it for $220 and secure an $83 profit. But I'm not going to. It's a crazy situation here, but right now the volatility is still very high. Right now, this is in the best possible position it could be. It's in between our short strikes. And so, but this thing expires in 11 days. And there's still $220 of extrinsic value in this position. So, yeah, right now it's trading for $220. It's all extrinsic value because right now we're in between our short strikes. And that gives us a theta of about 10 right now, which means every single day, this thing decays by about $10 in value. So this position, theoretically, if EWZ doesn't change between now and tomorrow, when it's still going to be $30.16, and the only thing that changes is time, then every single day, one could expect to make about 10 bucks on this position, right? So to get a theta of 10 for a buying power reduction of 810, that's about 80 bucks per theta. That's absolutely fantastic. Like, I am really surprised that there's this much time premium still left in this position. So, whether I want to close this thing today or not, the question I would ask myself is, would I open this position today? Like right now, if I wouldn't have this position on and somebody said, wait a minute, this thing is 11 days to expiration, you can open this strangle, collect 220. I think I would. I would open this position, mainly because getting a theta of 10 for an $800 buying power reduction is pretty good, but also because right now, the break evens on this position, right, for somebody opening it today would be 30 minus the 220 and 31 plus the 220, right? So this thing would be like $27.80 and $33.20, like $27.80 on the downside and $33.20 on the upside. That's kind of like the break even. And if I look at that here, these two blue lines are my current position of 30 or 31, but right down here, 27.80. So it has not breached 27.80 in a long time. So the expectation that it would do so in the next 10 days is maybe not that much. So I would feel pretty comfortable saying, yeah, I'm pretty confident it's not going to breach 27.80 in the next 11 days. On the upside is 33.20. Again, the last time it touched 33.20 very briefly was on October 15th. So basically, is this going to go sideways for the next little bit? Because that, in my opinion, and again, this is not investment advice. Like, I mean, look at my year-to-date P&L. Like, don't take advice from me. But generally speaking, I would open this position. So that's the reason why I'm not closing it today. I could close it today, walk away with an $80 profit. But in reality, I think this time premium is going to come out of there pretty quick in the next week or two. And this thing, I would love to get another $100 out of this. I think I can squeeze another 100, and if not, I can roll it. But again, if I zoom in, the size of these movements haven't been really huge. A lot of small movements in here, which is what I'm looking for. There was one big red down day, but everything was down that day. That was on December 1st, and then it recovered the next day. So really, because I've already collected $3 on this position, right? 303, my break even is 30 minus the 3 and 31 plus the 3. So my personal break even is like $27 and $34. So I'm going to keep this on. I would love to squeeze another $100 out of that position. So that's what I'm going to do there. IWM, a big jump up today. And so, I don't really think that in the next 11 days, it's going to hit 231. And so what I'm going to do now is I'm going to try to close it. If I can close it out for 297 today, I can save a couple of bucks here. Max loss here is $3. Sometimes I got to pay like $3 and and a penny or whatever to close it out sometimes. But if I can close this out today, I'm just going to do so. Take my, whatever loss I have on here. How much did I lose on this one. So in this position, I've collected 317 in credit. Amazing. I open. Oh, okay. Yeah, this is only the open position. That's it. Yeah, opened it back in July. Okay, so this is only good for 180 days here. So maybe it goes back even further. But I've been kicking this around and rolling it for quite a while. I don't think I collected 300. I'm not sure why it's including this one here at the beginning, but even if I just start from $1.60, I think that's what it is. October 6th. Yeah. So I opened it for $1.60 plus 10 cents, paid 2 cents to roll it, collected another 32, another 21, another 17, another 18. So if I do 60 days here, that's more like it. Yeah. So there you go. I've collected 256 bucks in credit. I can close it out for 296, 297 now. You know what? Fine. I'll take that $40 loss. Call it a day. This position has these IWM iron condors have been very good to me all year. You know, this is, I think, the first loss I'm taking all year, and it's not a huge loss. It's a $40 loss. That's what happens when you do defined risk. You only lose 40 bucks. Don't do those undefined earnings trades like I had earlier this year. But yeah, so I'm going to try to close this out. And if I can pay less than $3, I can save a couple of bucks. It's all good. Get the $500 of buying power back. And I might have to try with 297 or maybe even 298. But I'll close that out. I'll get my $500 buying power back. And yeah, life goes on. And then EWZ, hopefully I can make another $100 there. It'd be really nice to squeeze $100 out of it. Now it's 218 because it went up by a few cents. Great. The other position here is BITO. This is the Bitcoin Futures ETF. And I sold this put credit spread back in the day, not thinking, actually I thought that was a pretty low risk move. It was out here. And of course, Bitcoin has had a bit of a meltdown, huge step down today, starting to recover. So I'm going to see what's going on there, but I can still roll it out. So that's what I'm going to try to do now. It expires in 11 days. There's still $45 of extrinsic value, so that tells me I should be able to roll it out. The problem is there isn't a lot of open interest in these positions, so I can say roll it out to December 31st, pick up $22, and in the $28 long put, there's 2,600 people in there. It's an 8-cent white market. Again, not very good, but I feel like I can still transact in it fairly easily. This one here is the pain in the butt one. It is 20-cent wide and only about 230 people in there. So that one is difficult to work with. It's a 20-cent wide market. This one's 22 cents wide. I got to pay to roll it down and take some of the risk off. If I move this up, I got to pay 11 to take $100 of risk off. You know, that might not even be that bad of a deal. I pay 11 to take some risk, and then the worst I can lose is 400, not 500. That actually might be better than just rolling it out and collecting 22 bucks. Paying 11, taking $100 off, but again, that one is a 26 delta. You know, do I really think Bitcoin is going to go down that low? Probably not. I mean, I think it's going to start rebounding now. So I'm hopeful I can roll this out. This will rebound. So I'll take the 22 credit and see if anybody wants to buy this from me. And it filled right away. Fantastic. So I have more time. So there, I just bought myself more time there. And this position now expires in 25 days, not 11. Picked up a little bit extra credit there. So that's it. That's my quick update today. All right. Happy Monday.